As the clock strikes 7, the fight's alive. Inner circles here, where voices thrive. Turn on your screens, let the magic unfold. Listening and healing as stories are told. Come on, come on, this is your time. No topics too tough, just heed the calls. From mental health woes to justice we seek. Together we rise for the strong and the meek. A safe space for all, let's lift every voice. Inner Circle podcast where hearts unite. Sharing our truths, bringing hope to the light. Community strong, we're never alone. Together as one, we've created a home. With laughter and love, we break down the walls. No topics too tough, just heed the calls. From mental health woes to justice we seek. Together we rise for the strong and the meek. A safe space for all, let's lift every voice.
Good evening, everyone, and welcome to another powerful episode of the Inner Circle podcast, where we amplify voices, empower minds, and elevate communities. Tonight, I'm joined by a very special guest, not just a finance professional, but an old Totino-Grace classmate and friend, Patrick Rehkamp, senior finance writer for 1834, the Hard Net Worth Wealth Management Division of Old National Bank. Tonight, we'll be diving into economic outlook from a practitioner lens. Breaking down the economy, money mindset, and what it really takes to build generational wealth that lasts beyond one lifetime. Pat, man, it's great to reconnect, brother. Welcome to the Inner Circle podcast. It's been a while.
Thanks for having me, man. It has been a while. It's good to see you.
Yeah. So what you been up to?
What have I been up to? When I'm raising kids, living in the city, and going through all sorts of economic charts and tables and watching the stock market and the bond markets to see what's going on in the backdrop. 2025 has been kind of a tumultuous year on a lot of fronts. And I think economically there's been a lot of volatility. I think you could say things are okay. I don't want to say that the bottom is falling out of the economy, but there's definitely been a lot of ups and a lot of downs. And, I think the end result is it'll be, so far so good for the year, certainly.
Yeah. Well, folks, tonight you can definitely contribute to the conversation by putting a comment in the chat or calling our number. Also, follow us on Facebook, Twitter, or X, and LinkedIn, Spotify, Apple Podcasts, or YouTube. Subscribe to our YouTube channel, wherever you get your podcast. So, but man, we both have come a long way since our Totino-Grace always this, right? Looking back, did you ever imagine your career will lead to, shaping how people understand money and wealth?
No. I got out of high school and I went to college and I got into newspaper reporting. I just wanted to be a bum sports writer. And I did that for a number of years in Chicago, and it was fun. But ultimately, there was a job that opened up on the Metro desk covering city news, fires, homicides, things like that for the Chicago Sun-Times. And I took the jump over there out of sports. That led into investigative reporting in Chicago, a lot of government corruption, waste, fraud, abuse, things like that. And that ultimately led into business reporting, which got me back to the Twin Cities. And then I left journalism about 3 years ago to take a job as a financial writer for 1834, a division of Old National Bank. And it's been pretty interesting. It's a full-service bank with a wealth management division. I fall in there. And it's a lot of time spent talking to the head of our equities research department, fixed income research department, the economics team, where we have CFAs and economists that are analyzing what's going on within the U.S. economy and global economy.
Sure. And how do you translate that data though for like everyday folks to understand, like everything you are getting from your finance team, from your economics team? How do you translate that data into like writing, like maybe ordinary folks can understand?
Well, I think it depends what it is, right? I think the data that I typically like to follow is typically some of the easier stuff, to be honest with you, whether it's inflation data. I mean, everyone can understand when prices are going up or flat or declining. things like the jobs market, if unemployment's rising, lowering what industries are adding jobs, which aren't.
Sure.
Retail sales, which measures consumer spending, where people are spending their money. Are they spending more of it, less of it? What areas are they spending on? Things like that. Those things give you a pretty good insight. And then when it comes to some of the markets, I think generally it's kind of the best way to look at it is, what sectors of the markets are doing better and why, what's happening there. And fixed income kind of ties into the economy. If you look at yields on bonds or what the U.S. government is selling debt for, what kind of rates they have to give out to sell it, and it gives you an idea of what people think about the U.S. economy and the U.S. government.
Yeah. If you look at the current environment where since the new administration came to power, there's been a lot of, folks who said there have been a lot of uncertainty, businesses, kind of hesitant to maybe invest, and then with the tariff environment, how will you describe the current? How will you describe the current situation, I guess, or the current economy?
Well, I would say the current economy is pretty good. It's certainly not excellent, but I don't think it's absolutely dire either. And you can point to a lot of different metrics that show that things are generally okay. There's one-offs and there's certain things you can point to, but certainly the year was marked with a lot of volatility, and tariffs were a big part of that. I think what gets lost maybe in some of the tariff conversation is that businesses and a lot of people don't know what the final tariff rates are going to be. And they're constantly changing. They're getting delayed. Some of these are in the courts, and they're going to decide. There's getting to be a little bit more clarity in that tariffs are going to be higher than they were before this Trump administration, but I don't think they're going to be as high as some of the initial announcements that Trump made is probably the best way to say it. And you're going to get more clarity in the coming year as far as what happens with it. Tariffs, they have risen some prices. You can feel it. You can point to certain things that are definitely higher in cost because of the tariffs. But I wouldn't say that the tariffs have been totally destabilizing to the economy. It hasn't exactly sunk everything with it when they've come out. And there was a lot of worry early on, when the tariffs were first announced, this was going to absolutely torpedo anything and everything economically. They've certainly raised prices. I don't think they haven't torpedoed everything though.
Yeah. When you look at the inflationary environment, right, when folks, ordinary folks, go to the grocery store or they try to buy something, everything seems to be so expensive. Compared to like 2024 to 2025, do you think we still live in a high inflationary environment or?
That's going to be interesting. Is one thing, currently the federal government's in a shutdown. Okay. So there's a ton of government workers that are furloughed. And something that I'm not sure a lot of people know, maybe they don't care, but people that follow the economy like to know, is that all of the different government economic data reports are now on pause. So things like unemployment, we're not getting any new reports because all those workers are furloughed. They are going to release CPI data, which is a big inflation metric, on Friday, and that'll give us a good look as far as what's going on. We're expecting inflation to be around 3% year over year. That's higher than the 2% that they want, but it's not like the 9.1% we were seeing, June of 2022, I think it was. So higher than we want. It's trending the wrong direction, but it's not sky high. I think, I was listening to a press conference with the Fed chair, Jerome Powell, and he admits that inflation's an issue. I think people are still just angry at how much things cost rather than the actual growth in prices. Because that's what inflation is, right? It's measuring the growth in prices, not the actual price of things. The sheer price of things is what's ticking a lot of people off. And I get it. I got to go buy diapers and baby formula and all this stuff. I live it every day.
Yeah, definitely. Man, how do you think, your early education and values at the Totino-Grace will prepare you for a world where integrity, trust, and communication matter so much in finance, right? Like the kind of thing you read about, right? Is like, it has to be trustworthy, basically.
Well, I think it's a good question. I think if I look back at my days at Totino-Grace or college at Loyola, or even my grade school years at St. John's and New Brighton, I think that instilled some values. How do I apply it to the job? I think before I took the job, they interviewed me, but I was interviewing them too. And I really did believe in the people of Old National Bank, that they were honorable people, and I wasn't going to get put into any sort of position that I didn't want to be in. And that's really held true. the bank has been incredibly honorable about things. I've never have been asked to do anything that I would feel less than comfortable doing or being a part of. And when it comes to just analyzing economic news, I mean, it's to be honest with people, you have to. It's a client-based business, and when you're dealing with things like that, it's looking at, honesty is the best way, because the trust between clients in the bank is paramount.
Yeah. Is Old National Bank a regional bank or just local to Minnesota?
It's a regional bank. They just merged with Bremer Bank here in the Twin Cities, but they basically have offices throughout the Midwest and then through a little bit to the Southeast. I have to pull the total number of branches, but it's in the hundreds now, and I think it's the 25th largest bank in the country.
Okay. I mean, it's like just last week, right, there was some market turmoil. I won't say a turmoil, there was some, especially the banks were setting up because there was a fear, regional banks were maybe getting some bad loans and things like that. How will you assess, the regional bank? I mean, like when it comes to regional bank, in terms of, the current economy, how are consumers doing and things like that?
I don't follow a ton of regional bank news, but I mean, Old National has been strong and certainly been growing. It's been good on all fronts as far as that goes. I think banks in general, they kind of do well when the U.S. consumer is doing well, and that's not a regional bank thing specific. It's when their clients, their customers are making money, taking out loans, making deposits. The banks tend to do pretty well themselves. They're a pretty good window into the economy. And so far, a lot of the bank's earnings that are coming in, we're in the middle of earnings season right now, starting last week, and they've all been pretty good so far. So that, I think that shows you generally the U.S. consumer is doing okay. There's some cracks showing within, some of the U.S. consumer segment, but, overall, U.S. consumers are okay.
What's about the markets, though? If you look at the markets, do you think, I read something about Jimmy Dimon saying stock prices are so high that might be, maybe we might be in a bubble or stuff like that. I mean, from your lens, do you agree with that statement?
Stocks are certainly high. The current valuations are historically, at the high end of where they are. And there's been previous times where that has led to a bubble. I don't know if there's going to be a bubble or not. We're not predicting one, so to speak. We don't see one on the horizon, because why? A lot of these companies that have high valuations, they're still profitable. They're still making money. This isn't a lot of speculation that's driving these stocks higher. And again, I mean, we go back to the U.S. consumer has held in there pretty well. They're still spending money buying things, and they seem to do okay. I think sort of the big unknown is when you talk about the equity markets, it's generative artificial intelligence. Where is all of this going to go? There's been a lot of hype on that, and there is hundreds of billions of dollars being spent on it. Some people sort of equate that to the tech bubble back, in the early 2000s. I think it's a little bit different now, because that tech bubble was before even the iPhone existed, so to speak. So, I mean, this is a whole different type of, tech cycle, I guess. And again, I mean, a lot of these companies are profitable and they're paying for a lot of these generative AI endeavors with cash. That's not to say the amount of money, it definitely raises some eyebrows, and it's like, this better pay off, because if it doesn't, it's a huge investment that's not going to work. But generally speaking, I mean, we see the potential in AI, and there's definitely some real things there. But there are questions. I mean, is this money all worth it? Do people use it? What's the adoption rate, so to speak, if they're going to get into it and use it? How are they going to make money on it? Are they going to sell subscriptions? Okay, there's a subscription fatigue out there. I mean, I know I'm tired of paying for Amazon Prime and Disney Plus and Netflix and all this other stuff. You kind of wonder if that's going to translate.
Yeah.
But
I mean,
I think, there's a lot you could talk about with AI, and how disruptive it's going to be. We don't know. Historically, technology has been disruptive, but it hasn't been a total killer to the job market. I think there's a lot of worry around AI, and is it just going to replace people? Historically, technology has just created jobs too, and it may displace some people, but then there'll be new industries that were never even around before that they're going to need people in to do. And they hope that it certainly creates productivity too. People aren't spending all day building PowerPoint slide decks, and generative AI can help with that, so to speak.
Yeah. I mean, back to 1834. What does 1834 represent, and what makes it approach to wealth management stand out compared to other wealth management institution?
Well, it's a good question. 1834 is the year that Old National Bank was founded.
Oh,
so
wow.
when they wanted to create the bank's been around a while, and when they wanted to create this high net worth division, they needed a name for it, and they picked 1834. I think the bank in 1834's kind of overall selling point is that it has big bank capabilities, but kind of has a small bank feel to it. They pride themselves, I think, on being Midwestern with sort of that Midwestern vibe, demeanor, attitudes, and that tends to translate well. As, when you pick up the phone, you get a hold of people rather than having to deal with a 1-800 number and, press 1 for so-and-so and all that. That's kind of been their motto.
Yeah. I mean, like in your role, right, as a senior financial writer, you translate complex financial ideas into clear, relatable stories. What's the art behind making money make sense for everyone? I mean, how do you make money make sense for everyone?
I think that's a good question. I shy away from big phrases, big words, so to speak. And the financial world is littered with them, Abe. It is littered with them. They have all sorts of, phrases and language that they use. And, they're $10 words, but I try to strip out a lot of that because I think people understand interest, debt.
Okay. Yeah.
Inflation. They can kind of grab onto those sorts of terms, and some of the more sophisticated language I tend to do away with, just because unless you're in it every day, I just don't think the average person really knows what some of this stuff means.
Yeah, definitely. I do agree with that, though. I mean, like early on, right, when this administration came, a lot of
but it's not just even the financial.
Yeah. Go ahead.
No, it's not even the financial world. I mean, I think every industry has their sort of own language or jargon. And, I think just stepping back and being like, is my neighbor going to understand the stuff if I talk about it?
Wow, that's good. I mean, that's a good way to look at it. When you look at, when administration first came, with the tariff policy, with all of these different policies, right, folks were predicting like recession. We have been like almost 9 months, 10 months into the administration. Do you still think, from your lens or from your vantage point, are we going to get there? I mean, I know you said that the American consumer is doing very good, but I mean, the whole idea of a recession, is that completely off the table now?
No, it's not completely off the table. I don't think it ever is. I think some of the big recession probability models put a near-term recession around 30%. I'd have to go back and look, but it's something like that. It's come down. Yeah. We're not predicting a near-term recession. And, if you really want to get the weeds on this, I mean, I've looked at this. There's no technical definition of a recession. It doesn't exist in a textbook. But I think generally speaking, it's 2 quarters of negative economic growth. So 2 quarters of economic contraction. We don't see that for the most part, or really, that's not our base case. It's not that it couldn't happen, but we're not expecting it. And I think 2025 is going to go down as tumultuous. It was rocky, but the stock markets tend to be, near their all-time high. I didn't look today, but they've been bouncing, hitting new all-time highs multiple times recently. The labor market is hanging in there. I don't think it's great, but there's roughly about 1 job available for every job seeker in the country, which is good. It's not great, but it's good. And next year, you're going to see, I think, some of the implications start to come out from the One Big Beautiful Bill Act that they passed out of Washington, D.C. this year. Yeah. And there's going to be some measures in there that are stimulative. Businesses will spend more because of it, which should benefit people. And there's a lot of different segments of the people that they're going to have more money in their pockets. It's going to be a tax cut. Now, that short-term benefit, long-term, I mean, it's going to cause issues with the U.S. debt and the deficits that's going on. But if we're talking near-term recession odds, I think things like the One Big Beautiful Bill are going to make it less likely, certainly in the short term.
Yeah, definitely. I mean, for someone not in the high net worth space, right, what lessons can the average person learn from how the wealthy manage and protect their money?
Well, that's a good question. I think there's a couple of simple things, and these are things that, I may work for a high net worth wealth management division, but I myself am not high net worth.
Sure,
So
sure, yeah, definitely.
what do my wife and I try to do? We like to go through our checking account and see what we're spending money on. I think that's a
Yeah.
pretty good window into anybody's soul, right? As far as what they
Mhm.
care about and what they're spending money on, and then build a plan from there. And what do you need it? It's not super descriptive, but saving money as much as you can is never a bad thing. I mean,
Okay.
having a cushion for when times get tough certainly makes a lot of sense. And
Mhm.
I think, I don't know if I would advocate this, but I would kick the tires on it. Some of these generative AI tools like ChatGPT to build out a budget and how to save money, they're pretty interesting to look at, just some simple ways and plugging in a half dozen prompts. And
Yeah.
you might get some interesting ways where you can analyze your budget and your spending. I think,
Yeah.
for just the average person, that's not a bad way to go about doing it.
So you would tell the average person, obviously, do a budget. I mean, like an annual budget or maybe monthly budget or whatever, right? I mean, would that be your
That's
advice to
just
the?
it.
I mean,
That's just
yeah.
it. And people don't do it. I don't think a lot of people do it. And I think another rule of thumb that we kind of talk about in the office. I mean, every year, do a comprehensive net worth review. What do
Okay.
you
Okay.
own? What is it worth? Do you have any, investments? What do those look like? Get a good landscape of what you're at. What are your goals? Plans are worthless, but planning is everything. I think President Eisenhower said that decades ago. Think about what you want to spend money on. If it's a house, if it's kids' college, something like that. I mean, have these targets out in the future and allocate money to them as you can is certainly a good way to do it.
Yeah.
People saving for a house right now, I feel for them. It's a tough time to buy a house, and we don't expect to get a whole lot better in the near term. So, what people do there is their own decision, but it could be a little bit before we start to see some relief on that front.
Yeah, I mean, let's talk about the housing market a little bit, right? Because when I look at the interest rate right now, man, it's so high. But yet, though, right, you still have folks out there shopping for houses, still buying houses. Is that the right
Mm-hmm.
decision though? When it comes to interest, the way interest rate is so high, 7%, 6.5%.
Well, it depends on, I guess, what you can afford. I think what
Mm-hmm.
you're seeing, those, I mean, there's something like 60% of mortgage holders have rates at 4% or lower, and they are
Yeah,
reluctant to give those up. They
yeah,
don't want to be trading in those mortgages. But at the same time, life happens. You take a new job in a different city or part of the country or whatever. I mean, you have to move and you have to, buy a house in a lot of cases. So, I mean,
mm-hmm.
you're seeing some of the logjam kind of come undone like that. The baby boomers, they age out of their houses. They can't stay in the homes forever, and they had to put them on the market. So you're seeing some moves like that. So, I mean, is it a good time to buy a house or not? I mean, some people just have to at the end. You have
Yeah,
kids, and you got to have more space. It's,
yeah,
things happen where it's just going to force the move. The realtors always talk about, I mean, you can buy the house and you can, refinance the mortgage down the road. That's true. I wouldn't venture a guess though to say like, well, mortgage rates are going to come down by, X% within the next couple of years. That's very hard to say. I think, if you want to buy a home or you're going to buy a home or you have to buy a home right now, be comfortable paying the mortgage rate right now for a little while, because I wouldn't bank on mortgage rates coming down dramatically in the next year or so.
So you don't think do you think we'll ever see like the 2% and 3%? I mean, in the next 5, 10 years, are we ever going to see that?
I don't know, Abe. That seems pretty tough. I was
Yeah.
having a beer with my father-in-law last weekend on the deck, and we were talking about mortgage rates, and I was griping about how much they are. And he told me the first house he bought in Illinois, he won through a state-run program, like a lottery, so to speak, where the state was giving out mortgages at like 17% or something like that.
Whoa,
And that was a deal
whoa.
back then.
Yeah.
So I think, everything is in perspective. I think
Yeah.
2%, 3%, that I certainly wouldn't bet on that. But mortgage rates at 6.5%, historically speaking, that's not totally, it's not crazy. We've seen a lot higher mortgage rates, but certainly a couple of decades ago.
But the difference between that though, right, is like, I mean, home prices are so high nowadays, right? You see some homes, right? I mean, 500K, 600K. I mean, over 6%, 7%. That's high.
Well, sure. I mean, the difference in a 6.5 mortgage rate to like a 4.5% mortgage rate, depending on how much the house is, that's hundreds of dollars a month in additional mortgage payments and tens of thousands of dollars in interest over the course of the loan. I think, yes, housing prices are certainly high. They're near, if they're not at, they're near, the record as far as we look at like median home prices as far as what they go towards. So I think there's two ways to look at that. One, yes, it's incredibly frustrating if you want to move. However, someone like you or I mean, do you own your house in Maple Grove?
Yeah, I do. Yeah.
Okay.
Yes. I do.
The valuation on your house. Yeah, but think about it. I mean, the valuation on your house right now is as high as it's ever been. That certainly impacts your net worth and allows you to do some things that you otherwise wouldn't be able to do, whether it's borrow against it or things like that. So it's very frustrating. However, if you are a current homeowner, there's certainly some benefits to it.
Yeah.
It's a supply problem too, though. I mean, we're still catching up from we're catching up from the 08-09 crisis where the housing market tanked, and they have not kept up with the demand for home building. Has been a huge issue in all this. And I think there's some other factors too. I've seen some demographics. People are getting married later in life, right? So, back in the 50s or whatever, you'd get married at 22 years old, and then, you and your spouse would go live in a house together. Well, I didn't get married until I was like 35 years old. So my wife and I each had our own houses, before we got married and combined into one. The point being is we were each taking up a house, whereas decades ago, both of us would have been in one house, and that would have eased some of the supply issues.
Yeah.
Let me know if that makes any sense, what I just said.
No, it does. It does. I mean, it does make sense. The other thing, though, right? I mean, when you look at the immigration factor, right? I mean, there's an immigration crackdown going on right now. Will that have any effect on the economy in terms of jobs? I mean, if you don't, we look at real estate. A lot of immigrants work in those sectors where building those homes. Is that going to have any effect on the job market or the overall economy?
Well, I think it's going to have some effect on the economy, and I think it has. And one thing that we tend to look at is the employment rate. And right now, the unemployment rate's around 4.3%. Now, it's up a little bit over the last number of months, but that's still low. Anything sub 5% is considered good. But what's going on is the demand for jobs right now has really come down. But the problem is the thing is demand for jobs, along with just the labor supply, the number of available workers, has definitely come down too with a lot of the immigration policies. So I think right now a low unemployment rate, I don't know if masking is the right word, but it's certainly the low unemployment rate's not really showing the full picture as far as just the number of workers out there is down, along with the demand for workers is down too.
Yeah. And then the other thing too, I mean, here at the Inner Cycle podcast, we talk a lot about building generational wealth, not just financially, but in values, mindset, and opportunity. From your perspective, what truly defines generational wealth?
Say that again? What should define generational wealth?
What truly defines generational wealth from your vantage point, from your perspectives?
What truly defines generational wealth?
Yeah.
Well, someone in my shoes, it's not so much money. I don't necessarily always look at wealth as just what you can buy or what your net worth is. I tend to look at wealth in a lot of different aspects, and I think of time as being a wealth component too. I mean, when we're all born, we're billionaires when it comes to time as far as the number of seconds we have. Now, that's assuming we live into, I think, our mid to late 70s. Yeah. And, this weekend I got a couple of kiddos' birthday parties here. My daughter turns 4 and my boy turns 1. Okay. And we're going to have my parents over and my brother and his family over. And I feel very wealthy in those type of instances, I guess.
Yeah, definitely. That makes sense. Well, folks, tonight we are looking at economic outlook from a practitioner lens. And I have Patrick Rehkamp here with me in studio. He's an old friend from Totino-Grace. I'm glad that he's joining me tonight on the Inner Cycle podcast. So you can contribute to the conversation by putting a comment in the chat or call down with number 952-594-5154. Pat, man, the other thing is, right, what's the difference between simply earning money and building a financial legacy?
Well, I mean, what do you want to do with your money is always what you have to ask at the end of the day. There's a lot of people that they're not going to spend it all. So do you want to donate it all? Do you want to pass it on to your kids? Some combination of each. I think those are conversations that people need to have with it, or what do they want to leave behind too? Whether it's property, whatever other assets. I think there's a lot that goes into that that gets very personalized or customized. Yeah, I guess that's what I would say to that. I think the people that want to talk about foundational wealth, one thing that I would consider is never forget the power of compounding. As far as if you have money, and generally speaking, if you can invest it, that money often grows a lot faster than, say, the rate of inflation, or just sitting in a bank and accruing, whatever percent on some sort of savings account.
And we go back to the immigration thing a little bit, right? It says that the current employment or unemployment rate is might be masking things a little bit. When do you think the whole, like, the current administration immigration policy might start to show up in the data in terms of the overall impact on the economy?
Well, I think it's a hard question right now because with the government shutdown, we're not getting any data. So it's kind of like, I think once the government reopens, and I mean, we do believe it's going to reopen, it will eventually, they'll come to a deal. But when that happens, they'll start to get a better picture on this. I think, this isn't quite answer your question, but a lot of the DOGE cuts, for the federal workforce, if you took a buyout, you were getting paid, I think, through September. You weren't working at the federal government anymore, but you were getting paid through September. Well, the point being is you weren't showing up as unemployed during that time if you were still getting a check. Well, now those payments are about done, and you're going to start to see, how big those cuts were and what the impact of the labor market was. But again, with the government shutdown, we're not getting the traditional labor reports or labor data that we usually do.
If you ordinary folks, consumers, if you ordinary workers, be worried. Because right now, right, it's like we don't have a lot of information. I know you said the economy, the American consumer is still good, but you ordinary folks, be worried. Into the future, maybe 2026. We're about to hit 2026 pretty soon.
Well, should people be worried? I don't know if I would say worried. I would always say be watchful of it. Have a plan, be prepared. But we generally think, the economy could start to actually pick up and do better next year, especially once we get more clarity. Once we get more clarity on tariff policies, I think then businesses are going to be able to spend, invest, make plans accordingly. A lot of companies out there have just hit the pause brake on hiring, building new warehouses, factories, whatever, because they're unsure of what the tariff rates are going to be and what they're going to pay. Once there's some clarity, businesses may not like it, people may not like it, but businesses can at least move accordingly. If they know, tariffs are going to cost X, then they can say, fine, we'll spend money in this way. There's just a lot of stuff on pause right now because there's been very little clarity. And then again, we go back to the One Big Beautiful Bill Act. That should be stimulative in nature and create some economic growth.
Yeah, definitely. The other thing I want to bring up here, right? Many immigrant families and middle-class Americans work. They work hard, but they struggle to build lasting wealth. What practical steps, right, can help them start the process, right? Even if they are starting from small. What practical steps can every day?
Well, I think generally, I'd build a budget, analyze your budget, what you're spending money on, and set goals. And I don't think it ever hurts to at least talk to a financial expert. You never have to take their advice, but middle-class families, immigrant families, they have banks that they work with, and they should have some sort of private banking service where they can analyze what you want to do and what your goals are and how you can achieve them, financially at least, what you need to do that.
Do they come with fees though? Like if you have let's say I have a relationship with a West Fargo or so, like if I go talk to my bank, or do you think are fees involved in that, or it's just if I want to seek some financial advice from those folks, or how does that whole thing work?
It's a good question. I'm not super well versed in that, to be honest with you, but at least inquiry. I would at least make the inquiry. Then you'll find out, and that could be one of your initial questions. Like, hey, if we sit down and talk about this, is it gonna cost me anything? That's what I would do. Get the ball rolling on that aspect at least.
And then, like, 1834, right, how do you see wealthy families approach the idea of legacy and inheritance? Are there lessons everyday people can apply at their level?
Well, I mean, if you want to talk about inheritance and all of that, I think an important thing to do is to set up a will, set up a plan.
Mm,
That way it's crystal clear. There's no squabbling about it behind the scenes. I mean, my wife just turned 40. I'm a little bit older than her. I'm 42. And I mean, there's not a ton of money floating around here, but we at least set up a will so that our kids, are going to get X, Y, and Z in case I get hit by a bus tomorrow or something like that. I think things like that, I don't know why they would ever be a bad idea.
So should everyday people get a will? I mean, those are things we don't know, right? I mean, a lot of people sometimes just overlook these things, but that makes great sense. Should everyday people,
Yeah,
look at
I
it?
mean, sure, but I mean, everyday people still have assets, and they need to figure out what to do with them in the
Yeah.
the event that they die. And especially, I mean, this isn't even so much wealth related. I mean, I have little kids, and if
Yeah.
my wife and I go down in a plane crash or something on a getaway weekend,
Mhm.
I want there to be a plan in place, so that someone's going to take my kids rather than something
Yeah.
else happening that isn't what I was planning on. That's something to kick the tires on. I think,
Definitely.
yeah.
Def-
Again, I mean, I think everyday people, I wouldn't at least look at it as far as some of the generative artificial intelligence capabilities and see what you can do out there.
Definitely, definitely. The other thing, right? I mean, I know when you're in high school, or maybe even grade school or whatever, right? You don't have much of a financial education. Do you believe, I mean, financial education should start at an early age, right? Because, or maybe even high school. I mean, in college you do, right? You do learn some kind of a financial education, but in
Maybe.
terms of high school, yeah, well, yeah, maybe definitely, yeah, but how early do you think financial education should start? Because it's something I'm passionate about, right? We live in an economy. I mean, obviously we live in a capitalist society. Everything is about money. You talk about, doing a budget and all those stuff. How early do you think financial education should start?
Well, I mean, my daughter turns 4 Friday. I mean, we kind of
Mhm.
work on it with her already.
Oh, wow.
She's got to
Okay.
help pick up her
Okay.
toys. And well, I mean, this isn't crazy. We're not running Monte Carlo simulations with her and, talking about the magnificent seven within the equity markets, but it's like, you got to pick up all your toys at the end of the night, if you want $1 so we can go walk down to the gas station so you can buy, a sucker. I mean,
Yeah.
so I think that's in some ways financial aspect. I think in general, though, as far as some of the heavier lifting, high school certainly doesn't seem like a bad idea. I think at
Hmm.
that point you're able to comprehend a lot of the tools and thoughts that need to be applied, and it's a good way to get started.
Like in high school, right? What do
Especially
you
because then you're
think?
getting a little bit more independence.
Definitely, definitely. Especially like, I mean, in high school, right? What do you think should be included like in such a curriculum, right? Like a financial literacy curriculum. What do you think should be included? What is the most important thing?
I would say, start planning your life in buckets. You expect
Mm-hmm.
to, if you're in high school, what, you want to buy a car. Well, here's what it's going to cost, and how are you going to get to that goal? Or you want
Yeah.
to go to college, and here's what it's going to cost. You plan to get married and have kids eventually someday, and start to frame some of these ideas out. And it's not that you have to have a total picture of it, but at least be mindful of these things and what you
Mm-hmm.
need to do to get there. Um, something that I didn't necessarily appreciate going into this, and there's resources out there, but I didn't do it. I mean, kids are a wealth killer. I mean, my God, how kids are so expensive nowadays.
Yeah.
It's
Yeah.
I if you would have told me at 25, how much money my wife and I make combined, I would have been like, oh my God, let's go buy a yacht. Like this is, party time, and then at the end of the
Yeah.
month, my wife and I are like, oh my God, because, daycare bills and everything else. I mean, the stuff just,
Yeah.
it just eats up pretty quick. And
Mm-hmm.
that's, a lot of this is, in my opinion, just the way it works. And I
Yeah.
wouldn't trade it for anything. I love my kids. We have a lot of fun, but, kids are expensive. And I think that's not a bad idea. Is be mindful of that. If you want to have children, that's great. It's going to be, there is a cost to it, so to speak. And it's not the sleepless nights alone. It's, what it costs to put them in daycare or put them in school and feed them and clothe them and all that stuff.
I mean, you brought up a great point, man, right? It's like right now you read about stories how families are afraid to, stuff. I mean, folks are afraid, right? Especially young adults are afraid to have family early or have kids early because kids are so expensive. Very, very, very expensive. Yeah. I mean, it's like, how do you think that's what impact though, whether if folks say, man, to raise a family is tough, what impact is that going to have on the economy long run?
Well, I mean, children are needed for economic growth in a lot of aspects, right? I mean, it's something like 2.1 kids for every family is what's needed to sort of keep things running. And I think we're slipping below that. This isn't just the US, by the way. There is a lot of developed nations across the world where the birth rates are plummeting.
Yeah.
I mean, part of it is people are getting married later in life, and the older you are, the harder it is to have kids. I think some people are just deciding they don't want kids, whereas before it was maybe frowned upon not to. And now people are like, no, I'm not doing this because I don't want to. The point being is, I mean, you're going to have fewer people paying into things like Social Security, which certainly puts a strain on the system. And your companies want to grow. They need to hire people. If the people aren't there because they're not being born, that's going to be an issue. Yeah, there's definitely a cascading effect. I think the one but to all this, though, is the markets, people, economists, whoever, they're waiting to see how generative artificial intelligence plays into this. Do we no longer need this many people? Can we use AI to handle some of this workforce? And that's going to blunt some of the negatives of having just fewer people, fewer kids being born, and fewer workers in the economy. And that's not even just the U.S. That's a lot of Europe and other nations across the country or across the world too.
I mean, with this whole AI thing, right? I mean, I'm glad, like generative AI and AI overall. A lot of people are afraid. I know you talked about it earlier, but they're afraid, right? Yeah, they might lose their jobs. It's like folks, no one know what the true impact of AI is going to be, though. From your lens, do you think? I know you mentioned earlier there might be some industry that might come out of this whole thing. I mean, technology can always disrupt, but it creates new industries. But what do you think from your lens?
So here's our general rule of thinking about this is that AI is not going to just outright replace people for the most part. People that use AI will replace people that don't. Is a big denotion there. I think one thing that we kind of look at, though, is, I mean, technology has been disruptive. But I said this earlier. I mean, it's typically created a slew of industries, too. And I think one way to look at this is the retail world. Aside from like the Mall of America and a few others, I mean, malls are failing across the country. They're half empty. But there's more people working in the retail industry than ever before because of behemoths like Amazon. So the effect of technology has been pretty interesting on some of those aspects. I read somewhere too, there's an economist, David Autor, I think from MIT. There's something like 60% of the workforce is working in jobs that did not exist 80 years ago.
Wow.
Now, history doesn't always repeat.
Yeah, definitely.
Podcasting, I mean, Abe, there wasn't podcasting when we were in high school, and that was 20 years ago. If there was, I wasn't aware of it.
No, it wasn't. Yeah, that was it. Yeah, you're right.
So that's, think of it that way. And again, I don't want to say that there's not, I mean, there certainly could be some pain with all this, but, that's the way that at least we look at it so far. And again, I'm cautious to be super gung-ho about it, but, there certainly is some potential and promise there. And, we see it, whether it comes to fruition or not. We don't have a crystal ball. We have to wait and see.
Yeah. I mean, any other thing that you brought up a good point, right? AI is like those that uses AI or those that learn how to use AI might not be replaced. I mean, but the adoption rate, though, right? I was talking to we had a segment here and we talk about AI a week or so ago. The adoption rate among the population seems to be very low right now. I mean, not a lot of people uses ChatGPT or whatever, but I think those are great tools.
Right. It's an interesting tool. I'd be aware of it. I know how to use it. I mean, we use generative AI to certain aspects. I mean, I have to write things all day, and ChatGPT can create content.
Mm-hmm.
I'm curious, when I plug something in and see what ChatGPT spits back out, I generally don't think it's very good, but there's certainly things in there or concepts or ideas that, I certainly use. Like, well, I didn't think of this. That's not a bad point to plug in, things like that. It certainly comes in handy.
Yeah. And the other thing, right, you have a unique lens into the markets and investor psychology. What are you seeing right now that gives you optimism, and what trends worry you the most, though? Like right now when it comes to the markets, especially the equity market.
Well, I mean, the equity markets, here's the thing to look at. So like the S&P 500 index is a pretty popular index since, among the 500 largest public companies in the US.
Mm-hmm.
Well, right now, I mean, it's been hitting all-time highs, and I think right now it's down. It's down a little bit today, but it's been near all-time highs. However, the thing about the S&P 500, if you want to sort of drill into this a little bit, is that it's market-weighted. So the bigger companies account for a bigger portion of the moves. So if a company like NVIDIA, which has been in the news a lot, because of the chips that they make for AI, if NVIDIA is up 10%, that can move the entire index, up, a degree. Whereas like the 50 smallest public companies in the S&P 500, their moves won't dramatically impact the index. It's very weighted right now. So you're seeing roughly 10 companies that have really taken off, and that's pushing the index higher. I think the 10 largest companies make up something like 30% of the S&P 500. The other 490 make up the other 70%. So the market concentration, I think, is something that is something we're watching closely, because while the index is up and that gets all the headlines, it's really only a small percentage that are driving the overall index higher.
I know you said like these companies are still growing and making money though, but how sustainable in the long run?
Well, that's a good question. I don't know the answer to that. I talk with the equities team a lot, but I'm not an equity analyst by any aspect. I think, again, it'll be curious to see what happens next year, because sooner or later there's going to be investors and people that want to see the payoff from AI and all the money that's getting poured into this. I think next year, though, again, I mean, back to the one big beautiful bill, there's going to be some tax cuts and some depreciation provisions that come into play that will certainly help the bottom line for a lot of companies that could spur things up.
Yeah. Like, let's get back to the wealth management landscape a little bit. Right? Is AI and technology changing the wealth management landscape from your view?
I think so. I don't know if AI, there's very few, if any, industries that AI is not going to touch in one aspect or another. I think here's a good example that, I can share with you is right now we're in earnings season for a lot of the big public companies, right? And last week it was, I think the big banks reported, and this week there's something like another 80 that the S&P 500. Well, all those companies, they hold earnings calls where the CEO and some of the other, executives will give a presentation, and then they take questions from a lot of the analysts. Well, now AI can go in there and scrub the transcripts for certain words, themes, notes, and that way you can get a pretty comprehensive view if, all of these companies are thinking about things the same way, what they're worried about, what they think is positive. You can go through these earnings transcripts now, condense all 500 of them, and say how many of these companies mention the word tariffs or recession in their earnings call, and it gets back answers to you, which I think is pretty interesting.
Yeah. I mean, as we try to wrap this up, it's like there's a wealth gap in America, right? Do you think though, the wealth gap that we have in America, is it more about mindset or information access?
That's a good question. I'm not sure about it. It's hard to say one way or the other. I think, historically, it depends what kind of household you're born into. Certainly matters a lot as far as, if you had a wealthy family or not to begin with, that certainly has an impact on where you end the race. However, that's certainly not the end all be all. I don't know. It's a good question. It's certainly an issue. I mean, we're seeing this now in the economy. This term bifurcated comes up a lot. And what's bifurcated? I mean, there's kind of two different camps. And when we talk about U.S. consumers, those on the higher end certainly seem to be doing better than those on the lower end.
Yeah, definitely, definitely. I mean, when it comes to like the conversation about money, right, seems to be a taboo in many families where some people don't talk about money because like, man, I don't want to think about it. I don't even want to stress about it.
No.
But how can folks have productive, right? As a financial writer, how can folks have productive conversation about money?
I mean, personally, and again, this isn't advice. I mean, my wife and I block out an evening once a month, to sort of go over finances, what big bills came in, what we're expecting, you know, got to buy a car in a year, how we doing on
Mhm.
that? What else is coming down the pipeline? Kids transitioning from daycare into school, how's that going to impact the cash flow in the house? I think if you're married or have a significant other, spending a little bit of time every month going through all that certainly has a lot of benefit. Um, I don't know if money necessarily should be a stigma. I think it can be, if there's a lot of bravado and, you brag about making this much money or whatever, sure. But otherwise, you know, ask questions of people that you respect and that, have done well and hopefully get
Yeah,
good advice out of it.
yeah, yeah. I mean, just with that point, right? You are work with and waiting for some very successful clients. What habits or discipline do they share that anyone can adapt? You think?
I don't have a ton of contact with clients, to be honest with you, but I think generally, they're pretty good planners and if what we see a lot of times, right? I mean, I'm not speaking specifically in my bank, but a lot of wealthy people, they
Hmm.
tend to be older. You realize you'll have so many years left, having a set plan, being aware of what the medical costs are going to be towards the end of your
Hmm.
life, which that's when things really ramp up as far as expenses go. Being aware of that, having a plan for it, building contingencies so you don't outlive your money, I think is a big one too.
Okay.
People are living longer and longer right now traditionally, and
Yeah.
it can get more, certainly be very expensive. So being cognizant of that is certainly a good thing.
Yeah. At the age of 42, how do you personally define success and wealth?
Say it again, buddy. You broke up.
I said at the age of 42, right? You're 42. I said, how do you personally define success and wealth at the age of your life?
Well, I mean, if we're talking financially, it's I can get the kids in daycare and there's a car that's running and there's a roof over their heads and no one's missing a
Yeah.
meal. So, we're going to chalk that up as a win. It's not pretty day in and day out, but I think, that's a win. Success is I'm doing something I find interesting. I like doing it. I like the job. I like the bank that I work for. I think they're honorable, good people.
Hmm.
And if you're happy at what you do, to me, and you can make a living on it, then yeah, that's success. But well, I spend a ton of time with my kids, and that's time you'll never get back, doing otherwise. So I feel very wealthy in that aspect.
Definitely, definitely. That's great. What's one belief about money like you held 10 years ago, even 15 years ago, that has completely changed, that's completely different today?
I didn't think money was important. I didn't think it was important. And it absolutely is important. I don't. Here's what this. No, I'm stealing this line from my old man. He said, "Money is not the most important thing in life, right? Your health,
Definitely.
your health, your faith,
Hmm.
stable relationships with loved ones. Money is probably in the top five. It's probably number five as far as most important things, I would argue. And I think
Okay.
having that perspective is key. It's not everything, but it certainly is something.
Yeah, definitely. I mean, it drives every aspect of our lives, right? Especially if we have family and things like that. So that's very, very important. Like, man, it has been a great conversation. I mean, I'm glad that you could join me here. But as we try to wrap these things up, right? What legacy do you plan to leave behind as a senior financial writer, for 1834?
Well, I don't know if I can educate some people and they found some of the pieces that we wrote interesting or gave them something to
Hmm.
think about or chew on. I hope that's
Hmm.
okay. And
Hmm.
I don't know. My kids are so little yet, so the book isn't written, but I hope they love me and think I'm a good guy when it's all said and done.
Yeah, yeah.
Some days I'm not so sure, but we'll see.
I mean, like, what advice will you give to a high school kid at Totino-Grace right now who's going to high school, right? About money, about finance, about investing. What advice will you give them?
Well, I mean, I would see if Totino-Grace even has any sort of financial literacy programs. And if they don't, I would reach out to, there was an economics professor back then. I would reach out to them and ask them, what are some good introductory books to get my arms around this thing? How the economy works, planning, saving money, what are the best ways to do this? Even just, almost dictionary as far as what some of these terms mean. We hear price to earnings ratio within equities.
Yeah.
I mean, what does all this mean? People can, getting your arms around some of the lingo, I think, is key. And, I would reach out to some of the, if I was at TG right now, if I had kids there, I would have my kids, talk to some of the teachers there and see what they would think are some of the best tools, or what some of the best books are to read, or at least what some of the best podcasts are. There might even be a podcast, with an audience for high schoolers around this type of issue.
Yeah, definitely, right. And then one or two last question here for you though, right? Is like the equity market played a huge role in our lives. I mean, a lot of people, their only introduction to that or the way they do is through their 401k. I mean, how can folks, everyday folks, learn about the equity market? I mean, the stock market, right? You hear that in the news day in and day out, but a lot of folks are so much far from it.
Oh, personally, I'm a believer in the Wall Street Journal. I read it every day. I think the language they use is pretty easy to comprehend, and I think it's not the end all be all, but they certainly do a pretty good job of covering what's going on in the markets, and I think they do it in a way that people can understand too. I mean, sometimes it might not be the most interesting thing in the world, but I think that'd be a good start.
I agree with you, right? Yeah, the Wall Street Journal do have some great articles, good stories, and they have some good writers too. I do check that out every now and then. Lastly, then, right? You said when we started this segment, you said you went from sports writing, to investigative reporter, and now you're a financial writer. Mm-hmm. Man, how how would you describe those those three worlds? Because those are completely three different worlds.
Okay. So sports writing is a ton of nights because the games are at night. So, I was a bachelor at that point, but it's like you never see your friends until about 2 a.m. when you're done doing game recaps and everything, and then so your days and nights are totally out of whack. You have to do a ton of travel. So to me, it's a young man's or a young person's profession. Okay. Government corruption is insanely interesting, and digging into some of those things are experiences I'll never forget. It's also incredibly stressful because, a lot of these politicians, they don't threaten to kill you anymore, but they will threaten to sue you. I think being sued is probably worse than being killed. And now I got into financial writing because I found it interesting. And it was something that I didn't have a good grasp on. And as a business reporter, it seemed like an area to sort of jump into and learn on the fly. And that sort of bled into what I'm doing now.
Yeah. Well, man, it's been a good conversation. Any last message, any last, plug-in you like to give to our audience? Many of them are immigrants families, everyday working families.
If they want to check it out, 1834.com has a ton of material on it as far as thoughts on current economic views, general best practices. We have a lot of, sort of evergreen content on there too. You can surf around and check it out. Mm-hmm. And shoot me a note when your boy's playing basketball, Abe. We can meet up over the wintertime at TG.
Thanks, man. It's been a good conversation, Pat. Thank you so much for joining us tonight. And we'll be in touch. I'll definitely do that. I'll shoot you some, shoot you an email so we can play some ball together sometimes. Yeah. So.
All right, buddy.
Okay. Yeah. You have a good night. Thank you so much.
Yeah, man.
Yeah.